As summer is here in full swing and inventory continues to climb, inventory of unsold homes on the market, it's been climbing every week nationwide. However, buyers are still buying, and they seem undeterred by the trends of rising interest rates. People have to have a house, they have to have a roof over their heads, and they're buying schools and they're buying quality of life. It seems like well-priced homes in good locations are still selling in multiple offers. There was a fixer I heard a couple days ago over the weekend that sold in over 10 offers, way over asking. The so-called tappable equity, that's the amount of cash borrowers can take out of their home while still leaving 20% equity on paper, hit a record high of $11 trillion, highest in history. That's 34% increase from a year ago in equity. At the same time, leverage, which is how much debt the homeowner has against the home, has fallen dramatically. Total mortgage debt in the United States is now less than 43% of current home values. So it's the lowest on record. People are sitting on a lot of equity in their homes, and this provides a pretty good cushion if things were actually to adjust. Before we get into the slides, I'm going to hear from Craig Barton with CB Loans. Good morning, Craig. So what are interest rates doing, and are they going to come back down?
Well, we're going to probably see a little bit of a rise between now and the end of the year. The Fed announced last week the three-quarter point adjustment. So we're going to see that move, but that shouldn't really deter a home buyer buying in now. Obviously, people have to live somewhere. Things will adjust. It might be in late 2023 or 2024, but they get in now at today's prices will make a big difference going forward. And again, too, James, just to repeat what you said, they're buying into a lifestyle. They're buying into the schools, the restaurants, the places to live in the South Bay. It's a very unique area throughout the whole world.
We live in paradise, Craig, and everybody's dying to get to the beach in Southern California. So let's go to the slides. I have a couple from the Altos research, and these, again, are nationwide data, and it's altosresearch.com. They have a lot of great information. If you look at the first slide there, Michael, this is available inventory of unsold single-family homes is rising. It rose 5.6% this week nationwide. That's 18% more inventory than we had last year. Rising interest rates have cooled buyer demand. If you go to the second slide, Michael, price reductions are up. And this is a good indication. A balanced market, we see about 30% of all homes experience a price reduction before they sell. Currently, look at that red line is on a very steep incline, and we're looking at 27% of all homes currently are experiencing that price reduction, and that number is moving. Typically, 30% of homes experience a price reduction, and again, we're at 27. If you go to the next slide, this is an interesting slide. This is the percentage of the market that has been relisted. So if the home didn't sell on the MLS and it was either canceled, expired, or hold and relisted, it tracks that. They either fell out of escrow or something. We have been talking about, company-wide, we're seeing more and more buyers backing out of escrow. Currently, we're seeing nationwide this number rise, and this is now at 1.6% of all homes in the U.S. are relisted nationwide. I think we're probably seeing a little bit more company-wide. It's important to use this data. This is great data. You got to have solid data behind your dialogues with your buyers and sellers. And it's imperative that we price homes correctly. And a dialogue could sound something like this. Mr. and Mrs. Seller, it's imperative that in this market you price your home correctly. Price reductions are climbing quickly, and the relisted properties are climbing as well. So the ones that don't get priced right when they first hit the market are going to have a harder time selling. And we could be experiencing changing market conditions into the later part of this year. So agents moving forward, work on your business, generate those referrals from your past and current clients, re-engage with buyers, manage your expenses, generate more net income. One way to do it is manage your expenses and reinvest in your business. And don't forget to take some time off to recharge and work on a balanced life.